Hello, everybody, and welcome back to the Gold Rush. I am Sam Gatlin, an analyst at All Star Charts Gold Rush, coming to you live from Athens, Greece today. And I am joined, as always, by my esteemed colleague and co-host, Mr. Jason Perz.
Hey
He
guys.
is an editor at the Gold Rush. He's a portfolio manager. He is a former BMX rider. Jason wears a lot of
Real estate
hats.
investor, we could keep
He's
going
a
on. Too many
gangster. If you
things.
guys don't
Too
know
many things.
Jason Perz, your life has gone horribly wrong. He is the man, and you are in for a treat today. We have a lot of charts to go through. So without any further ado, let's just get right into it. And let's start with slide number 2. Mr. Jean Gauthier, put it up. We've got a long-term chart of gold, and I'm seeing a lot of skepticism, Jason. I think that's the right word, skepticism. People aren't believing in this rally in gold. And, zooming out on the gold chart, this chart comes from Larry Thompson of Thompson's Two Cents at Stock Market Media. He wrote about this, and Taylor Swift in the same post. So if you haven't seen that, you need to go to the Stock Market Media blog and check out Thompson's Two Cents, because Larry is crushing it. One of my favorite analysts in the entire world. So I'm incredibly grateful to be able to collaborate with him at Stock Market Media. And I love it when he talks about precious metals, because he's brilliant. And anytime he talks, I listen. And you should too. And he was just pointing out that gold on the long-term chart. This is a monthly chart with the 14-period RSI in the upper pane here is near its most overbought level ever. You have to zoom out to the 1970s, which the GLD ETF does not go back that far, but this is a historic bull market in gold, and it's rarely been this overbought, and that's not characteristic of a downtrend. People are skeptical of this uptrend because it's too overbought. People are making too much money. It can't continue. But in bull markets, the RSI reading gets super overbought, and that's exactly what we're seeing. And if you go back to the 1970s, when it got this overbought, it was just the beginning of the bull market, and it went on for another five, maybe 8 years. I'm not sure. Go back and check my math, but it was not towards the end of the bull market when it was this overbought. So I'm still super long, super bullish on precious metals, and I think it's just started, Jason. This is a chart you brought along of the sectors. So we have like the S&P 500 sectors, but we also have things like TAN and semiconductors and biotech on here. And you can see that in 2025, gold miners and in the metals and mining ETF, XME, are leading by a country mile. It's not even close at this point, Jason.
No, and I left out a couple things on here, because the returns and so on. But if we're looking at GDXJ, it's up over I think 110% today. GDX is right behind it. XME is 60% on the year. I'm pretty sure. So once again, like these are leading by quite a bit. If you look at XLK, I think it just topped 20% recently. So, we want to be in these sectors that are leading the way. So many people, the biggest thing I want to let everybody take away with them today is the fact that the precious metals rally isn't over. Sam and I have been very bullish on precious metals. Basically going back to 23, we've been talking about it a lot. Going forward, we've continued to say double down here, add to the positions here, and so on. And even though we've moved over 100% in a year, I think we got a lot more to go. I can't see any
You know
reason
why we have more room to go, Jason? It's because of central banks buying hand over fist. You have Poland buying over 18 tons in Q2 alone. This data comes from the World Gold Council. You also have fund managers are not buying gold. This is the latest fund manager survey from Bank of America. They asked fund managers how much gold they own in their portfolios, and the vast majority of them said 0%. So I don't know what these people are seeing out there who are calling for the end of this precious metals bull market, but all I see is extremely bullish trends and a lack of participation from fund managers. And, you have the short interest in the GDX. There's a lot of different data points I can use to say why I'm bullish on precious metals, but all of them are telling me that this is not close to over.
And it might even be lower, Sam. And this is a thing that, I keep looking into and trying to just ask fund managers about or banks about gold miners. Like if you're looking at gold, yeah, like some people allocate to gold, even big funds, big banks even allocate to gold, but who's buying silver? Who's buying gold miners and junior miners? It's like nobody. Nobody's on that trade yet. And once again, think about I think that was 2020. Warren Buffett bought Barrick Gold, and that was like literally at the top. And so we're not seeing we're not seeing any of these institutions or big fund managers come out and say, I'm buying a gold miner. When that starts to happen, like that's really like when this thing's gonna get frothy. But at the moment, like we're not seeing it. Same thing. We're just not seeing the right sentiment to say this is over by any means. Central banks are still buying heavily. Some countries are buying even heavier. The miners are outperforming.
Totally, and they're just now breaking out, Jason.
Yes,
you brought along this great chart of gold bugs, the gold bugs index, the flagship fund of the gold bugs relative to gold futures, and here it is breaking out of a massive consolidation with a historic Bollinger Bandwidth squeeze, and this looks like it's just beginning. Like we haven't even seen the bull market yet in the gold miners. Like that's what this chart tells me, Jason, which is crazy if you put it in the context of since March 4th of 2024, the silver miners ETF is up 170%, outperforming everything in the world, outperforming Greece, which is up like 70% this year, outperforming the AI ETFs. Everything has been lagging relative to the precious metal stocks. And it hasn't even started yet when you look at this chart.
Yeah, and I think the silver miners and the junior miners and even the explorers, like nobody cares about these yet. Nobody's moving into these areas yet. And most importantly, if there is some big money in some of the major gold mining names, there's certainly no big money in any of the smaller names. And that's when you start to see this thing get really wild. Like there's going to be people who start to go down the cap scale and find smaller and smaller names. And next thing you know, anything with the name silver in it is just jumping like crazy. Like that's probably the next stage we're going to see in this cycle. Silver's up over 50% year to date. That's really good. Silver's up a lot today. Gold's down. That's also very good. That's a risk on top.
Not to mention gold's still below 50. Like we haven't even seen the breakout in silver. Like
yes.
Yeah.
When we see that breakout in silver, that's going to be to me, silver's going to hit 50. I keep saying silver's going to hit 50 by year end. I said that, months ago. Now I'm saying it again, like by year end, we're going to see 50 and we'll probably be above that. Honestly. I don't think this thing's going to stop. I don't think it's slowing down. I think it's just going to keep going. And I think people should stay long. That's the biggest point of like what we're talking about today. Like this rally has legs, it still looks good. Stay long. Sentiment is terrible. Nobody cares about these things. Nobody wants to be in them. So if you've been long, congratulate yourself, pat yourself on the back, and hold those positions.
Totally. And at the top of the show, we mentioned that the short interest in the VanEck Gold Miners ETF is at the highest level since 2018. And now, Jason, you found this very interesting data point of the shares outstanding in the same ETF, GDX. The shares outstanding in GDX are at the lowest level since 2016. So not only do you have that short interest catalyst, or tailwind, if you will, but you also have just a lack of shares. So just like, it's like a double squeeze to me. And then you have the massive base breakout, like GDX is just now getting above that 2011 peak. It's one of the biggest base breakouts in the entire market. So, it's already in a parabolic uptrend, and I don't think it's ending anytime soon. I think it's going just straight to the 161.8 extension level, which is quite a ways away. It's at 100, and GDX is at 73. So Yeah.
Oh yeah, I think it's hitting 100. I think it's going to hit 100. I think we're going to be past those 2011 highs at some point. Like we always say, like our targets are going to be low when we look back in a couple of years and go, wow, 100 and GDX is sitting at 200. Like that's completely possible. It's an uptrend. It's a precious metals bull market. There's no fever like gold fever, so just stay long. Main point of today, and I'll say it again, just stay long. Like everything is saying stay long. Short interest is high. Shares outstanding is low. Like every sentiment is terrible. Central banks are still buying gold. Like it still looks good. Like this rally has legs.
Totally, Jason. And we were just on an internal analyst meeting for All Star Charts, and we started a conversation with energy. I think we're all getting very interested in energy, and I think the bull case for energy really starts with yields. If you overlay yields and energy going back years, it's almost a perfect positive correlation. So I think new highs in the long end of the bonds is not a want. I think it's a need for the energy bulls. And since the Fed cut rates last Wednesday, I believe it was, I think there's been one down day in the bond yields, but it's just been pretty much straight up. And this is what we saw last time the Fed cut rates. The bond yields just went straight up. It doesn't matter what you're looking at, whether it's the twos, the tens, the 20s, the 30s. Everything's going up since the Fed cut rates. So I think inflation's coming back. And if you look at something like this amazing chart you brought along, which is the CRB index, the long-term chart of it with the bond, the yield curve, if you will, and the lower pane coming out of inversion. Remind me of the nomenclature, disinverting.
No, coming out of inversion, you got it.
Coming out of inversion. I nailed it. Look at me. That's super bullish.
I will make a bond trader
only,
out of you yet, Sam.
yeah. So like, the CRB is a lot of energy. So if this is breaking out, energy's doing well. And yeah, that's where my head's at, Jason. What do you have to add to that?
No, there's a lot standing out in the energy sector. There's a lot standing out in the bond market. I think if you look at global yields, we have to continue to be on the side of like it's possible that the surprise trade of the year, and I've said it a million times, is higher yields in the United States. Nobody wants to believe that. They're like, oh, it's kind of like what happened in COVID. You look, Sam, go back to chart 8 for a sec. You look at the yields around the globe. Think of it like COVID. China, you would say, oh, COVID's happening. Well, they're locking down China, but that'll never happen in the United States. It's kind of the same thing here. Like, well, it's Europe has a lot of inflation, Great Britain, Japan, they're printing all the money in the world. Like we don't do that. So you look at these things and you go, well, that's probably not going to happen in the United States. Well, it can happen. Absolutely. And all these economies that we're looking at right here are very connected. So I wouldn't be surprised to see these things break out. I wouldn't be surprised, like I've been talking about, where the Fed starts to cut rates and then the long bond starts to move up, because I think anybody who's a government who's trading these bonds or a big trader who's trading these bonds, I think everybody can see that there's inflation under the surface. And if there is inflation under the surface and we are cutting rates and, there were talking about possibilities of, QE and so on, all these things, we're going to see more inflation. Just like in 2020, the commodity super cycle didn't just die out, like it just continued. Gold went sideways for a long time, then it broke out. Copper is now moving. The copper miners look even better than copper does. Now we're starting to see the energy stocks start to move. Then possibly oil will start to move. Yields possibly.
And this chart, I think, does a great job of illustrating that, Jason, just that relationship between bonds and energy stocks.
Yes, and that's something that you always got to pay attention to. I always say like one of these guys has to win. Everybody looks at it and they go, well, because recently it was like everybody wanted to be long energy and bonds, and I kept going like that's not going to work. Like maybe short term you can make a couple trades like that, whatever, but long term, one is going to win. And right now, it really looks like energy. I can't see any reason why energy would just roll over here, but pay attention to this. If energy gets above 100, we get a weekly close above 100. I would, bet the farm on energy moving a lot higher. If the TLT starts to bottom out and turn back up, I'd be very surprised, but that would be another thing to say, hey, energy might be dead. But continue to watch this chart. I would put this on everybody's own chart deck that you're going through daily just to pay attention to it. And if this thing rolls over, TLT rolls over, I'd get very, very bullish on energy. And it's already starting to roll over a little bit. But if that relationship breaks down even more, where X or TLT keeps moving down and TLT keeps moving up, I think we know what's going to happen next, which is energy is going to move a lot higher.
Totally, yes. We have my good friend from Toronto in the chat. Um, yeah, it was awesome. Jason, we got to go to the Hockey Hall of Fame in Toronto last week during our Portfolio Accelerator event. That was so cool. I got to touch the Stanley Cup. I know you're not supposed to, but I did it.
Newbie. What a newbie.
I don't root for any of these hockey teams, so I don't really believe that any of my teams will be cursed because I don't have a team.
Yeah, I don't really watch
So
hockey either. But I
yeah,
like
I
to
don't
see
even
like
know
the
the rules of
building was
hockey.
amazing. The building was like my
Yes,
favorite part of it.
it
Yeah.
was
Yeah. You were talking about
totally
agriculture
yes,
or architecture the other day. Like that's a fun subject you should look into more. You'll probably like, especially being in Greece.
totally yeah. Yeah, we were talking to our Gold Rush Premium members earlier this week about how we were a 2-minute walk from the Agnico Eagle Mines headquarters in Toronto. And that's the largest, for you though, that are not aware, Agnico Eagle Mines, AEM is the ticker. That's the largest gold mining stock in Canada, the second largest in the world. We were right next to it, and we were just giving them our spiel on precious metals, how we're bullish, much like we're doing today. And Jason, nobody was interested at all in precious metals. All they wanted to talk about was AI this, AI that. And AI is great, and I have AI exposure, and it's wonderful. But like as we told you before, the miners are outperforming everything, including the AI stocks, and nobody cares about it. And we told you about this chart right here. The fund managers still aren't buying into gold, and these smart trader friends of ours still aren't buying into the metals rally. So I think there's a lot of tailwinds for precious metals, Jason.
Oh yeah. I can't see any reason not to think so. So, biggest thing here is biggest takeaways from today is gold looks good. Stay long gold, stay long the miners, keep getting junkier in the sector, go down the cap scale, go to junior miners, go to explorers. And now we're starting to look at after copper, now we're starting to look at energy. Energy's starting to move. So you want to own strength in that sector. So keep looking for those areas. And there's a lot of money to still be made in the commodity cycle.
Totally, yes. So today and yesterday, All-Star Charts dropped a lot of scans on the blog focusing on small caps, including natural resources. So you can go to the blog and check out the scan that we ran and our favorite trade ideas from it. But as you can see, there's uranium, there's coal, there's oil and gas, there's precious metals. We included it all in this scan. Everything under $10 billion we included in this scan and outlined our favorite trade ideas. And if you want to learn more about this, you can join Steve and Mary this afternoon at 4:15 Eastern time as they dive into all of these scans. I think we published 20, maybe 30 trade ideas from all of these scans, just all focused on small caps because the IWM is flirting with a massive base breakout, Jason, and small caps look incredible. So I think there's a lot of opportunity there, and I'd encourage all of you to join Steve and Mary this afternoon at 4:15 Eastern time for their deep dive on small caps. And if you are interested in learning more about precious metals, check out All-Star Charts Gold Rush, where we publish a gold report, a commodity report, a currency report, and all kinds of other things at All-Star Charts Gold Rush.
And
We're
a bond
outlining a
report.
ton
Sam can't forget the bond
and
report.
did I miss bond report?
Yes.
Sorry, I didn't mean to do
It's the
that.
most important one that everybody signs up for is bonds. It's the most important market. It's the most important market in the world that nobody cares about.
It's true.
But
It's
it is
true,
the most
Jason.
important
Yeah.
market. You got to learn about bonds.
Yeah, it's true. And yeah, we're outlining a ton of trade ideas and making a lot of money right now. So check out the link in the description. It's $12.99 a year, and you can get a 30-day money back guaranteed deal. So there's no risk in joining us for 30 days. I think you'll enjoy it if you come and check out our research. But that is all we have for today. I hope all of you enjoyed this show. I hope you'll join Steve and Mary later this afternoon for a deep dive on small caps. It's very exciting. I know Jason's involved. He doesn't trade as many stocks, but he's got the ETFs. He's making money in the
Got
fund.
the futures. I got the ETFs. We're in a lot of small caps internationally, also small caps and futures. So, we've been talking about it a lot. We've been vocal about it. So I think it's a great area to be. And just like gold miners, you want to go down the cap scale. So now we're down the cap scale in actual stocks. But also the gold miners, the small cap gold miners are where you want to be. They're all kind of small caps if you really think about it. But the juniors, the explorers, that's where the money's going to be made. So that theme's kind of playing out across the world right now. So it'd be a good time to check these guys out and see what they're talking about as well, because there's going to be a lot of good trade ideas in there as well.
Totally. We will see you all there. Thank you for joining us, and we'll be back live at the same time, same place next week. But for now, adios.
Later, guys.